This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, January 28, 2016. Euro dollar. So not much going on with the euro as it continues to trade sideways. Key resistance comes in at 110.60 and key support at 107.11. Given the broader downtrend, a lower top is favored at 110.60 ahead of the next downside extension below 107.11 and back towards the December 2015 base at 105.21. Sterling dollar. So cable is consolidating off recent lows, that 140.80 low from last week, which was the lowest level seen since March 2009. At this point, there still is scope for additional upside and plenty of additional upside to allow for a more significant correction before the market considers the possibility of resuming a downtrend. Don't rule out the possibility of a move towards the 146 to 148 area with a breakback above the high that we saw earlier this week at 143.67 to strengthen this outlook. Any setback should be limited to the 140.80 area so that these technical studies can unwind from oversold readings. Dollar yen. So dollar yen is in the process of carving out a little bit of a short-term bottom after breaking down to 115.97 the other week. There is risk for additional upside, though while the market holds below 20.65 on a daily close basis, the pressure remains on the downside. Only back above 20.65 would force a shift in the short-term structure. Euro Swiss. So Euro Swiss finally a big mover over the past several days after taking out the critical September range high at 110.50. This now opens the next major upside extension towards the 114 to 115 area further up. Any setback should be very well supported into the 108 to 109 area, while only back below 107.15 would compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie dollar has been bouncing out from recent support at 68.27. That's a fresh multi-year low and the lowest level seen since March 2009. At this point, look for the current rally to extend potentially into the 71 to 72 area, though a lower top will be sought out given the broader downside pressure in favor of the next downside extension and bearish continuation. Only back above 73.85 would compromise the bearish outlook. Dollar CAD. So dollar CAD continues to correct off that recent parabolic high that we saw up towards near 13-year highs at 146.90. At this point, there is risk for additional declines towards initially the 140 area, which is previous resistance, now certain support, and then maybe down towards 138. But ultimately, the market should do a good job of holding above 138 on a close basis in favor of the next higher low and bullish continuation. Kiwi dollar. So Kiwi remains pressure to the downside overall with a recent rally being well capped up towards the 66 area. Look for deeper setbacks in the sessions ahead below key support at 63.47, which will expose a retest of that key 2015 base at 61.30, which was the lowest level seen since May 2009. At this point, any rally should be very well capped towards 67, while only back above 69 would compromise the bearish outlook. SPX 500. So the S&P 500 is doing a good job of bouncing out from recent support at 1811 after the market recently took out that critical August 2015 base at 1834. At this point, there is risk for additional corrective upside before the market considers a lower top and fresh downside, though overall the structure does favor now the downside and we have a bearish structure following that breakdown below 1834. As such, any rally should be well capped into previous support now turn resistance at 1993 with only a close back above to compromise the newly adopted bearish outlook. Gold. So gold has seen a major breakout in recent trade after taking out key resistance at 1112. This sets the stage for the next major upside extension towards 1192, that high that we saw back in October of 2015. At this point, look for setbacks to be very well supported ahead of 1080, while only back below 1070 would really compromise the newly adopted bullish outlook for gold.